Okay, people, welcome back to me trading, and I'm going to give you all a trade recap for today. Today, I lost two trades and I risked 1% per trade, so now we're down 2.08% on the account. So, right now, we had like five consecutive losses. We lost a trade from Monday, and then we lose two trades yesterday, and then we lose another two trades today. So, we had five consecutive losses. So now it's starting to get a bit serious. So we down 2% on the 50K account. If we go down another 6%, the account being breached, and yeah, our maximum loss is 8%. Maximum loss limit is 8%, so we have 6% left. So if we lose another 6%, the account gone basically. So let me show you all the trades we take today. Let me show you all the trading overview. We took a trade on AUD card and then another trade on AUD CHF. Both of the trades, as you can see, I was risking $250 per position. I entered two positions per trade because I had a take profit one and a take profit two. But when you add up these two positions, it comes into $500. So that one is $500. That one is around $500, right? It it the lot size didn't give me exactly $250 to reach, so that's why I reached $261. So yeah, that's that's the two trades I take. As you can see, commission increase the loss. So yeah, that's it. Let me go into the trades. Let me show you all why and how I take the trade. So on AUD CHF, where the trade was, boy? Which trade I take there, boy? For AUD CHF, was it AUD? It was AUD CHF. AUD CHF. So what did you trade for AUD CHF? Okay, look at that. Alright. AUD CHF. Alright. So on AUD CHF, I look at the 4 hour. I see the 4 hour just break above a high. That's a high, bullish and a bearish candle. And then on the 2 hour, it was in an uptrend. 1 hour is in an uptrend. So I'm looking at the higher time frames for higher time frame confluence, so I could see which direction I want to trade in. Then I see price break structure right here, and it created a high on a low. So with that high and a low, I could see that's a trend leg, and inside the trend leg, there was, oh my gosh, fuck. Just 1 second. There was one FVG, right? There was also another FVG. It's kind of confusing because on my chart that wasn't a down candle. On MetaTrader 5 that was a up candle. So if that was a down candle, I wouldn't take the trade. But on my chart, that was an up candle. So we just have to pay like that's an up candle. Because on my chart on MT5, that was an up candle. Alright. And then they have another FVG right there. So we see, because we use our Fibonacci tool, we draw it from the high to the low because we plan to take uptrend trades. But we didn't take uptrend trades. Why? Because on that candle close that created the high, we see that candle fill that FVG and that FVG. So we know usually when the candle close fill the FVG, or if they had any filled FVGs in the trend leg when the high was created, that means the trade is likely to lose. And we're using our new strategy now, which is betting against ourselves. So I would have normally take that trade to go up, but since I know when the FVGs are filled, the trade is likely not going to respect the higher time frame movement, I enter a sell trade. So I enter a sell trade on the zero point 0.5 line. Oh, that's not a sell trade. On the zero point 0.5 line right there. So it enter me right there. I put my stop loss at the high, and then I put my take profit at the low. So that's a 1-to-1. That's the first take profit. And then the second take profit was a 1-to-2. So that was the second take profit. So price enter me right here at the zero point 0.5 line. It go down a little bit, and then it start rejecting, and then it hit my stop loss. So that's the loss on AUD CHF. And then we had a second trade on AUD card. So as we can see, the 4 hour was in an uptrend, because before I take any trade, I check the higher time frames to see what the fuck is going on, to see what direction I trading in. Right? 4 hour in a definite uptrend, just break above a high. 2 hour also in an uptrend. 1 hour also in an uptrend. So on the 5 minute, I was looking for uptrend trades. I see price break above that high. It creates a trend leg. That's the low. That's the high of the trend leg. When price create that trend leg, it was on that candle, right? It was on that candle. Let me block that there so you would understand what I talking about. So when price create that trend leg, it had a FVG right there. The trend leg was created when that candle became a bullish candle to create the high of the trend leg. Now, if we use our Fibonacci tool to draw from the high to the low, normally we would be taking uptrend trades on that. We will be waiting for price to go back down in the discount area to go higher. But since that FVG was filled, that's a FVG right there. Okay. Bomb class. Okay. So since that bearish candle went down into that FVG, when it closed to fill the FVG, the trade is likely to lose. And we're testing out our, well, we're not testing out our new strategy, but we're using our new strategy. So when I know the trade is likely to lose, I just betting that the trade will lose. So I would normally take an uptrend trade on that trade, but since I know the trade going to lose, I take a downtrend trade or a short position. So we enter the zero point 0.5 line, put our stop loss at the high, we put our take profit at the low, and then that's our first take profit at 1 to 1, and then we put our second take profit at 1 to 2. Price enters in the zero point 0.5 line, and then it went ahead and stop us out. So that's the trades for today. We right now we down a lot. I don't know how much we down for this week, but this week we down a good bit of cash. So yeah, because at the start of the week we start with 4% on our account, and right now we down to negative 2%. So that's a whole 6% loss. But yeah, tomorrow is Thursday and Friday still there, so I'll let y'all know what's going on. But that's how today went. We also I find out that some forex pairs, because I trade in all of these forex pairs. So I looking at all of these forex pairs between 9:30 to 12 o'clock. Some of these forex pairs have high spreads, right? Like for example, the trade on AUD card. The trade on AUD card got me out of the trade around that level when it was supposed to get me out of the trade at that level, just because of the spread. So tomorrow I would be trading with forex pairs that have lower spreads, because it's just better for my strategy. So yeah, that's the one thing I'm going to change, is just trade with forex pairs that have lower spreads. So I know I'm not getting out of positions early because of fucking spread. But yeah, that's how it looking today. Um, I still have a feeling we're going to pass that account. That feeling still inside of me. You check it. So yeah, that's it for today. I will see you tomorrow.